Welcome back to another Stocklabs weekly market recap. This is for the week that ended October 8th. So, first full week of trading in October in the books, and it was kind of, I'd say, mixed. We were expecting a little bit more two-way trading to happen from the prior recap, just to sort of break the steady downtrend that we'd been in for several weeks. And yeah, so the week started off soft. I mean, I think Monday was down, a solid down day, but that ended up being sort of the low for the week. The rest of the week, kind of market either walked up, or if it gapped down, then it got bought. Pretty, looked easily, but the rally didn't extend much. I think Thursday was a gap up, at least in S&P, gapped up, and then the rally extended a bit, but then it ended up giving it all back. And Friday was just sort of soft, which I don't know how much you just read into uh, Friday. I mean, the week still closed, I think, green for major indices. So, I mean, it didn't look like a huge bottom got put in this week, but I mean, maybe a more nearer term one did. It's hard to tell just because the action has kind of been pretty sloppy, so you don't know how much to read into it. For major indices, yeah, so SPY was up 85 bips. Dow was the outperformer, up 130. And the Qs were basically flat. I mean, up 3/10, and IWM, yeah, same thing, basically flat, down 25 bips. So not much to go on there. Treasuries got, hit down 2.3%. I mean, this is sort of probably what's holding back the NASDAQ a bit, just because they're sort of tied together in a lot of macro models and stuff that funds and people use. So, yeah, I mean, indices, like, it's okay. I mean, up, decent amount after a pretty consistent downtrend is not that bad. So the mega caps, I think these actually did pretty well, if I remember what was going on. Yeah, so they were all up. Well, okay. So Netflix is still just, I mean, I think this has been the top out of this list for a few weeks in a row now. And I mean, this is like all time high stuff for Netflix. I mean, every time this stock sort of looks like it's like people lost interest in it, and it's just whatever, it's died off. It sort of makes one of these runs and is like, back as like the hottest one out of all of these. Google up 2.3%, Microsoft up 2%, Tesla, 1.3%. It's not much of a move for Tesla, but still sort of hanging around, getting closer to this 800. And Apple flat, Amazon flat, and Facebook down pretty big. And I'm just blanking on what the Facebook thing was. I think it was something like, I don't know. It's like, I'm not even going to guess. I don't want to sound like an idiot. Okay. Week to date on industries. Yeah, so pretty flattish. You can see this sort of like goes with the sort of mirroring like the indices where, okay, so basic materials actually were up again. I mean, this has been like a gigantic run for these types of stocks. And yeah, the rest of these sort of hit or miss. Healthcare down, which, see that all the time. And utilities up. It's weird that utility, I forget, it's weird It sounds weird to me that utilities would have been up like this, but maybe it's just part of a more defensive rally. Although this is not really defensive unless people are considering these to be sort of inflation protection or inflation, you know, playing for an additional leg up in inflation, which is possible. Matches up with the bond sell off. As far as individual sectors, yeah, so the oil and gas plays are straight out of this basic materials. Gold is also out of basic materials, and this might be out of all the recaps, the first time gold has been in like the top 3 or 4 or 5, whatever. More oil and gas, copper, yeah. So all this stuff is, but only 5 sectors up over 5%. So breadth in the quote unquote bounce, if you want to call it a bounce, not spectacular. And then on the bottom end, trying to see if anything sticks out. I mean, there are a couple more sectors that are down over 5% than up 5%, but it's not like egregious. Gene editing stocks down big this week. Hospitals down pretty big. Yeah, not seeing anything else that really sticks out. Okay, that's fine. We'll go just see strictly by market cap returns. So 1 to 5 billion, down 25 bips. And 5 to 10 billion cap, up 8 bips, flat. And large caps, up 80. Okay, so that's like sort of telling that there was that big of a jump. Mega caps, up 1.48. And Terra caps, up 90 bips. Okay, so pretty telling. We had the 1 to 5 billion and 5 to 10 billion were more or less flat. They were, one was a little bit down, the other was a little bit up. But then as soon as you went to stocks that were over $10 billion in cap, the returns went way up. I mean, 10 to 50 billion was 80 bips. And then 50 to 100 billion is up 150 bips. And then the 100 billion Terra caps are up 90 bips. So big disparity between stocks under $10 billion and over $10 billion in market cap. I think that sort of backs up that it's maybe a little bit more defensive of a rally because, we've seen it before where people tend to just hide out in, large, fundamentally sound companies. They're not trying to take a lot of speculative risk. They just want to allocate their money into something solid and not worry about it. So sort of tells you what sentiment is around the general market. I think it's been deteriorating for a while. Intelligence, we have retail, we have small cap energy, we have real estate, S&P, energy, and transports. So like more of a reflation slant as far as intelligence goes. And let me just flip this around, see if it says the same thing. I don't know what this top one is. Okay, and then short Russell is rated as bearish, so that's bullish Russell. And then, yeah, these are inverse ETFs too. So DRIP is inverse oil and gas, and NRGD is uh, big oil inverse. So they're both rated as bearish, which means that that sector itself is bullish. So would we say bullish, more reflation type trades at this point for next week? I don't know how the general indices are going to do. I mean, it seems like we're probably going to, if I had to guess, I don't know. I think it's just going to be more of this sort of same action we saw this week where we don't really go anywhere, but, you know, there might be some swings, day to day. I mean, that sounds so generic that it's kind of sad that I even said it. But yeah, I don't think that I don't think the market's gonna like take off on a new trend, one direction or another this week. I think it's just gonna sort of slosh around like it's been. So maybe we start with the reflation trade. There's going to be a day where that gets whacked, and then the tech stocks all take off again or whatever. So uh, yeah, there's a lot of rotation. There's um, a lot of head fake moves from different sectors, different stocks day to day. So I wouldn't worry about like chasing stuff, and I also wouldn't um, like panic on any sort of down day or whatever, like big down day, because it's like um, most likely it'd be getting reversed, either the same day or in the next couple days following it. So yeah, again, our seasonality for October is generally bullish. I think we're about flat for the month right now. So I mean, this is going to kick in at some point. So whether the market dips more from here and then sort of starts going the other way, or if the trend just sort of picks up, sometime mid-month, this is going to be pretty reliable, I think. One of the strongest seasonal months of the year. Third strongest? Yeah. Yeah, April's the strongest, then November, then October. Yeah. Okay. So that's it for now. We'll be inside Stocklabs all week and just keeping track of what's going where. So good luck and talk to you next week.